When a startup wants to raise capital, they typically do so via equity funding, selling shares of their company to VCs in return for cash. But in recent years, alternative options like debt funding have been on the rise as founders look for ways to raise capital without diluting ownership. In debt funding, founders take a loan from investors, paying them back over a series of installments with interest while using company assets as collateral. This process usually takes about 3 to 6 months, but Mars Growth Capital is making this process way faster with the help of AI.
Mars Growth Capital was born by the Liquidity Capital and the MUFG. MUFG is one of the most historical company in Japan. It's really focused on the digitalization. We met a great company called Liquidity Capital, and they have the brand new concept of AI due diligence process platform.
Basically, we're developing a very deep and unique machine learning technology that is designed to enable credit providers at the end of the day, provide better debt facilities to mid-market companies, especially in the tech industry. We were looking for strategic partner to help us get into Asian Pacific market. We identified that MUFG basically, we had a very strong relationship with them.
We have known these guys through our venture capital firm. We know that the quality of that technology is quite high and unprecedented. We've been very keen to connect ourselves with these fintech players. These guys have some kind of color of the venture capital, as well as the founder spirit. So we liked.
Before Liquidity and Mars, all debt facilities in tech industry were supported by securities and collaterals of the company. But in nature, most of the best growing pre-unicorns and unicorns companies in tech, they don't have assets, they don't hold buildings, they don't have, inventory. So most of the banks and most of the creditors in the world do not know how to provide beyond a very limited amount of debt. That is the glass ceiling that we had to break when we approach this market. And the way we do it is using our technology. We have a machine learning platform that basically enables us to predict what's going to happen in the company. And we basically taking the risk against our own prediction. So if we believe in a company, we're providing the money almost without any securities. Hence, we are not limited in the amount of capital we're providing per company.
So for example, if the company need urgent growth capital, once we start a call and deploy the money, probably we can finish in at least 1 month, and we can actually finish that whole process in. But in other hand, I think that in at least 3 to 6 months. Yeah, so we start the business from the last 3 years, and we already have the 5, 6, 7 portfolio already. We also focus on the supporting the SDGs type of the startup company. We like to contribute the society to be an important role in the ecosystem.
We have 14 term sheets outside at the moment. We've been approached by over 300 companies so far in the region.
This is the kind of journey for us to provide our clients, new client, a new type of the banking services. So we are quite excited to this joint venture.
We like to expand the pan and become a very important role in the ecosystem. Our target of the client is not only the mid-later stage of the startup company, but also the unicorn, pre-unicorn company. So we like to actually support that very diversified type of the client in this ecosystem. Once our Mars Growth Capital model and the dynamic system is approved and justify ourselves in the APAC ecosystem, we like to expand our region and including the EMEA, and maybe in the future in Japan. That's our kind of the goal.